Hello and welcome to a Natgas video. We talk about natural gas futures here today. What I want to communicate with you is that we do have a potential 5-wave move to the upside already complete into, into the swing highs from March 2025. I think I mentioned it before that, when we label this would be a 1, 2, 3, 4, 5 possible, but the 4 would be extremely weak. This is more what you would find for someone who's using really traditional Elliott Wave when labeling, because from a traditional Elliott Wave point of view, what you would often find them do, analysts, is use the concept of wedge patterns. I don't find that so reliable anymore in today's markets. It's possible, but often you would find a more healthy way for in today's markets, like in the yellow scenario. I'm going to take you through that in a minute, but that doesn't make white invalid. So white is still very likely. For example, we can say this is 5 waves up. So I already have 5 waves either way. And this is a 3-wave pullback. Generally keeps the door open for higher prices. However, in the context of the white scenario, where the wave 1 took like a year or so here, the wave 2 should take a little bit of time. We have a corrective rally from there in a B wave and could start a C wave down now, or could be in the early stages of the C wave, which might take us possibly towards $2.38, $1.96. As long as we're holding $1.96, I can keep the door open for higher prices in a 1-2 setup, and then third wave rally could start obviously from there. Okay, that means in the short term there could be some downside pressure. In the white scenario, that means I need to understand what is the resistance area that in the white scenario needs to be respected. And it's this one, between $3.64 and $3.96. Why? Because if this is a B wave top, which it could be, after an A wave down in 3 waves, we have a 3-wave move up in B. By the way, it would be a WXY structure, best I can tell. It's a very complex correction, but not unlikely in a B wave. And then probably A, B, C in Y. But yeah, we could have started the C wave down. This might be wave 1. Might get one more low that wave 1. Then a wave 2 corrective rally. This is the resistance area between $3.65 and $3.97. Then a third wave down. Hold on. Fourth wave, fifth wave. Why do I say maybe $2.38? Because the way to measure targets is we take the length of the A wave, we go to the high of the B wave, and it's the 100% extension, which kind of is in line with the 61.8 retracement level there. Very common target, so I would at least pay close attention to that. There is, however, the yellow count, which I find a little bit more probable just looking at proportions. So we don't have 5 waves up yet in that count. We could get one more extension, that's what it means. One more extension, yep, but the move up is corrective, isn't it? It is. So it's not necessarily high confidence. We don't have a clear impulse in any direction, so it makes it tricky. So we just have to work with the levels and context here. Basically, I know that above 396, the yellow count becomes more probable. But because we're dealing with corrective structures, it could even mean an extended B wave. So unfortunately, there is not the answer. Could even say maybe this is an extended B wave. After each 3-wave move, that's the main takeaway when we're dealing with corrective structures. After each 3-wave move, there can be a top. That's because it's corrective. But basically, when we get up here, the next pullback again would then be yellow wave B, and there would be a support area, and we can use these support areas to distinguish between bullish and bearish momentum. So, for example, when we are tracking the blue scenario, the C wave to the upside should be a 5-wave move. In the yellow C wave as well, a 5-wave move. But in the white scenario, we should normally not break above the 78.6 retracement, just applying standard Fibonacci guidelines here. So that means we can use $3.96, $3.97 as a pivot to help us understand, is it the white scenario or is it the yellow scenario? And as long as below this, I mean, we're moving between support and resistance. By the way, yellow, B wave pullback, will become less likely below $3.09. So we have a range here. We have a range and we're waiting for a breakout of the range. And above 396, it becomes more likely that we're going to possibly test even here the previous swing highs from March 25, around $4.90. Yeah, I would find that quite likely, especially if we break decisively above 396. I mean, a wick above it won't really take us there, yeah. So for now, I'm just waiting for more evidence to see, is it the yellow count or is it the white count? We don't even need to distinguish between blue and yellow at the moment because they would move in the same direction in the short term. It's more about, okay, who's got more strength, the bulls or the bears? Preference-wise, I don't really have a clear. I'm quite neutral because the problem is there is no clear 5-wave move in any direction. Now, to be fair, maybe this move down looks a bit more impulsive, so it could be wave 1 down, yeah, but really, we're on a very small scale here already. And on the Natgas chart, you get a lot of distortion. So let's see if we test resistance and there's a strong rejection, it might be an indication the third wave down is unfolding. But it's more of a range-bound movement here at the moment. Yeah. What can act as I think, a long-term really interesting setup is if we form that C wave down, and then in the late stages of wave C to the downside, that could really be an interesting one to look into. Yeah, that's the Natgas update. Hope you enjoyed it. Thanks so much. Bye-bye.